Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is February 16th, 2012, and we are currently looking at price action on our 15-minute chart. And as you can see, today was an interesting day for the Euro US dollar pair because when it appeared that we would be risk off and we'll see more Euro weakness for most of the trading day, we eventually saw a relief rally in the pair and risk appetite kick into the market during the U.S. trading session. So then, of course, today the pair had rallied 184 pips from the session low here at 29.75, and it appears to want to extend its gains even higher. But like I said earlier, the pair had continued its common bearish bias from yesterday. As you can see from yesterday, there was strong bearish momentum due to, of course, the disturbing GDP numbers that signaled a possible double dip recession in the Eurozone. So, of course, this news weighed heavily on the market, and this bearish bias carried even into the Asian session and European session of today. But most importantly, the market was primarily risk off due to uncertainty over the Greek debt deal and whether or not the Eurogroup finance ministers would approve of a second bailout package for Greece. So this news weighed heavily up on the market and caused a sell-off in higher yielding currencies and assets. Now, if we glance back towards our Asian open, you can see that price opened below our daily pivot level at 3,100 at $1.31. And this is just an indicator of the bearish sentiment in the market. Now, if you were in front of your platform during the Asian session, you could have waited for price to break support at 30.46. Let me draw on a line here at 30.46. You could have waited for price to slide and break below this support, and you could have placed a sell order on the pullback to that level as new resistance. So if you would have entered a short at around 30.46 or a sell order around 30.46 upon bearish confirmation, then you could have took your profit at the $1.30 psychological support level for about a 40 pip trade, or you could have held onto the trade until it reached support at this 29.74 level, which is the 50% Fibonacci retracement of the rally that started in mid-January. Now, if I go to the 3-hour chart, you can see that this strong rally from the yearly low at 26.24 to the recent high at 33.22 provided this 50% Fibonacci level at 29.74. And as you can see, it served as strong support today, and the pair began to rally strongly from this level. So let's go back to the 15-minute chart. So like we said earlier, if you were to take your profit at this 29.74, if you placed your sell order around 30.46 and placed your or took your profit at this support level at 29.74, then it would have resulted in a 72 pip trade. So then that was one trade you could have entered, and you could have closed it out at 2 different locations. Now, it was at this support level and around this time that the market bias completely shifted. And not only did we hear good news coming from the U.S. economic data that contributed to an improvement in risk sentiment, but we also heard news coming out of Europe that they would not postpone their decision for a second Greek bailout until April, and that the finance ministers must decide on what to do by this coming up Monday. So this caused the euro to not only pair its losses against the dollar, but it had turned actually positive for the day. And we see this risk appetite kick in and this risk on move in the market due to encouraging news coming out of Europe. So, of course, throughout the day, we continued to hear news, and later on in the afternoon, we heard encouraging news that some of the European central banks, the banks in the Eurozone, were going to swap their existing Greek bonds or debt holdings for new Greek bonds. And this news really caused the market to rally some more, even in the late U.S. trading session. So if you were looking for an opportunity to enter in on this rally and go long or buy the U.S. dollar pair, you could have waited until the pullback to this 100 SMA line as support and place your buy order here at 30.35 upon bullish confirmation and took your profit when price reached the daily pivot point at $1.31 for about a 65 pip trade. So then that was one trade you could have entered during this risk on rally. And like I said before, it appears that the market wants to extend its gains higher. It tested this resistance here at 31.56. And I believe during our Asian trading session, we may see the pair slide further or slide lower and test this 3100 level as support, and from there continue its gains higher. So then that's my technical analysis review for the Euro US dollar pair today, and I guess I will be talking to you guys later. You guys have a wonderful day. Okay, bye.